Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Monday, March 9th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I'm with my partner, Bill Baruch, representing Blue Line Capital here at the Future Proof Conference down in Miami with some of the largest wealth advisors in the industry. Now, let's get you set up here for the trading day ahead as markets, they are tumbling overnight here, and the intensifying conflict in the Middle East had really sent those oil prices up over $100, trading as high as $119 a barrel, reigniting those fears that inflation could curb economic growth. Now, oil surged on Friday, and it was really Thursday into Friday hitting this boiling point after Kuwait and the United Arab Emirates, they had started reducing their oil output, and because of the fact that the Straits of Hormuz is closed, the region, it's difficult for them to move oil around as a lot of those assets are being targeted. So what they're doing here is they are curbing their production because the storage facilities are just getting to maximum capacity. That caused this squeeze, and it also caused a ripple effect because of the fact that there's no oil being produced, that you're going to see some supply tightness going forward, and you should see elevated oil prices. Now, that oil energy shock here is ripping through all other asset classes here, with bonds tumbling on fears of stagflation, and traders are reducing their expectations for Fed rate cuts. The dollar index continues to get that safe haven bid, and it's really pressuring the precious metals markets. So you look at April gold overnight, quite a wide range here, $189 an ounce here, with the overnight highs 52.10. That's a key level of resistance. The lows of the overnight session 50.21. That's a key level of support. So really a break in either direction could open up a move for a larger move in either direction. The 10-day exponential average true range sits at about $154, and gold volatility sits at 34. So the 50-20 level, a break below there, could really test that 5,000 mark, where I anticipate a lot of larger, longer term holders here would consider reducing some of their positions and probably have tightened up some of their stop losses just around that 5,000 mark. Now you look at the line to watch on the upside here, look at the last 4 days, the resistance point about 52.10 here, where a break above that could open up the door for 53.20 and then finally 54.50. So you look at May silver, the overnight range here, about $5.66. The highs of the overnight session, 85.30. The lows of the overnight session, 79.64. The 10-day exponential average true range sits at about $6.46, and silver's volatility is about 79.13. Now you look at copper futures, do yourself a favor, pull up a daily chart on copper. You can see that it tested a key level of support right at that 563 mark. The metal has been caught between two really competing forces here. You got this bullish structural fundamentals, you got the AI infrastructure build out, the energy transition here, demand, and also supply deficits, but you get this bearish near-term macro risk from the Iranian conflict and the concerns about global growth. So look at the ETF flows. Well, the ETFs, they cut gold holdings for a fifth straight day. They did sell silver here, and gold ETF flows declining about a tenth of a percent here, falling about 62,000 troy ounces. And you look at total gold held by those ETFs, they're only up about 1% this year. So you look at gold here advancing about 20% year to date, rose 1.8% here in that previous trading session on Friday. You'll get the silver ETF flows dropping about 0.6%, and year to date they're down about 4.6%. All last week, they reduced everything: platinum, palladium, copper, silver, and gold ETFs here. And the gold-silver ratio, 60-1. So no real movement there. So it's been quite organized as far as the selling between the gold market and the silver market. Now you look at stock futures, they are under pressure, but they are well off the lows of the session. You look at economic data coming out, no big releases here. We are in this blackout period for the Federal Reserve. And you look at the CME's Fed Watch tool, well, the markets are really starting to price in, and they show stagflation and stagflation fears. What I tend to do here is I look back at my notebook of when the last time we were in stagflation, and it was really gold was the performer in that particular economic environment. Something I tell people is that when you look at inflation, what you want to do is own the inflation. And where's the inflation? Back in the energy sector, which makes up about 6% of CPI. So you look at April, 17% chance they cut rates. You go to June, 35, and then September is where you get that first interest rate cut really priced in here. And they are still expecting 2 interest rate cuts this year. You go to the dollar index sitting at about 92.54 here, or I'm sorry, 99. 1.54. So really this elevated level on the dollar index here. Euro currency 115.72, and 10-year treasury yields, they are off their highest level, which was 4.22%, dropping back down to 4.18. The volatility index, and this is where things really get interesting, sitting at 28. When you get this thing into the high 20s and it goes above into the 30s, well, that would signal panic type conditions, and the market really is not going to like that at all. It makes it very difficult for intraday traders here to place their stop losses as the volatility really picks up in these markets. You get a 1,000-point move in the Dow Jones and it really whipping around about a couple hundred points here in the session. So the S&P Gamma exposure, it does remain negative here, which means that these dealers are going to amplify the moves in both directions. As the market sells off, they're going to sell more. As markets break through some key levels of resistance on the upside, they're going to buy more here. Now you go over to Europe and Asia, well, those European stocks, they slumped here for a third straight day, and the Asian stocks, they tumbled here with the MSCI Asia Pacific Index falling as much as 5.6% here, and it's its biggest, steepest drop here in 11 months. And what happened about 11 months ago? Well, it was the tariff tantrum that occurred here with those rising tariff rates here and the uncertainty surrounding that, with many of the tariffs being posted in triple digits. And that was the last time you saw the volatility index hit those levels here. And what happened was some of those tariffs subsided and futures had accelerated higher. If we get this conflict starting to subside, you should see futures contracts here potentially move higher as you get declining oil prices and energy prices. So if you guys need anything, you got any questions at all, reach out to the team here. You want to open up a futures trading account to possibly speculate in the energy markets. You look at crude oil, natural gas, they do have those micro contracts as well. So you can get the position sizing better here. Same thing with the silver market, same thing with the gold market. And if you'd like to hedge your portfolio on the equity side, well, stock futures, those options on the indexes are a great way to potentially position for a larger move to the downside. Something that I'm looking at on the US equities, do yourself a favor. Look at the 2020 lows in COVID. Look at where we peaked in 2022. Look at that bear market that we saw in 2022. Look at where we peaked again. And then we had the April lows here from the tariff tantrum. You can see this nice upward channel here. So our futures spiraling for a bigger move down to the bottom of the channel. We're going to have to wait and see what happens here. So if you guys got any questions, shoot an email to info@bluelinefutures.com. Remember, futures and options trading does involve risk of loss. May not be suitable to all investors. Good luck. Good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.